How would I invest $100,000? Hey and welcome to today's video. My name is Julian. On my channel, it's normally all about making you crypto fit. Today, I actually want to answer a question that I got from a viewer. And this viewer is actually a very good friend of mine. And this is not the reason why I'm talking about it. I receive a lot of questions and then I don't really talk about the answers. But as you will see in a second, this person put a lot of thought into how to invest $100,000 and asked for my opinion. And that really shows me, well, I love to answer questions, but I don't like to answer questions that you could Google. I really want to see that you have put some work and some thought into this. And yeah, then I'm very happy to give my own input. So let's dive in because I want to show you what this user actually sent to me. And you can see a bit on kind of what's been going on. So here's a screen share. And this is kind of the sheet this person sent to me. And I'm going to walk you through a bit so that you have a bit of an understanding on, well, what's been going on and what this user's thoughts have been. So, well, basically, this person talks about having 100,000 euros, so let's do in dollars, it doesn't matter, but $100,000. And he basically sold a house, and that's the kind of money that he has. Now, then he still has some crypto, and he's thinking about should he sell this or what should he do? He has some additional security tokens that he can't value, and well, he has an investment horizon of 15 years, which is really, really, really good, right? So this is kind of the base investment that we're talking about, and so we're talking about this kind of money here. Now, well, we need to have some financial base situation, and this is really important because from there we can have totally different scenarios. He has cash reserves, 12,000. Then he has a net income of 5,500 a month, which is obviously very good. And then you can see that he's investing 800 bucks a month in 200 in crypto, 500 in an ETF savings plan, and 100 bucks into peer-to-peer lending. So he has this going, and I think that's very nice. He has some additional $200 reserves every month, and he has some scalable income basically out of this. Additionally, he receives probably from all his plans 1,250, so around 100 bucks per month in dividends. Now here are his aims that he basically wants to have. He lives in a house and he wants to be able to pay this off within those 15 years, and that's $250,000. Now obviously there's two cases that out of this plan comes out. So let's say with this 100,000. Either after 15 years he needs a different way to pay off this house, or, well, the best case, the 100,000, for example, tenfold, and he's making $1 million out of it, right? I think quite realistic, quite possible, and obviously these are the possibilities. It might even be more, but let's kind of keep this. And so now what he does here, he has this yield calculation with 5% to 15%, and he made all this, and he has a compounded interest kind of going up there and having a look, just a bit of as an overview. Now, obviously, this is a very nice little base situation. I think many of us would like this, debt-free, having some capital, making good money, obviously. And so now there's these different scenarios. And you can see these different scenarios here on the bottom. And he starts off with a safe scenario, right? So these were his thoughts that went into it. And you can see at the very end, I'm going to give you my own opinion on this. Now, the very safe one is basically to go very, very broad. And he pretty much kind of splits the 100,000 into 5 different investment classes. So he puts them into ETFs. He puts some additional into shares, obviously large companies, especially when the prices drop there. He puts something into real estate, some peer-to-peer, and some crypto. And then when you kind of see here, he averages it out at 10%. My very first feedback on this is it's very, very difficult to give an average to crypto because crypto per se doesn't cash flow, right? So there's no yield. Peer-to-peer, I think, is very realistic. Real estate, 5% is realistic. Maybe stocks at the moment with 8% is a bit high. S&P 500 at the moment, I think we are between 5 to 6%. So I would kind of put this down a bit. ETF also obviously put it down a bit. But he kind of, I think he's not far off, right, in general. And I think he is completely right what his reflection there is. Well, it's safe and he knows what he gets out of it. Obviously, there is some tax implications there. He has rebalancing costs, and that is, I think, a major issue with this, and I would even put all those three here into this category. These things, especially because of interest rates, are at all-time highs at the moment. ETFs, shares with that obviously as well. Bonds, very, very critical to see this as well, many times part of an ETF. And real estate. And I would probably not put a lump sum into this at the moment. I would probably keep my savings plan and keep this running. It's going to be very difficult at the moment to, for example, also find real estate where you have some serious upside out of this. All right, so that's kind of my feedback here on this safe plan. Then we have the passive income one, where he's really focused on passive income. And so here he righteously doesn't add any crypto because there's no cash flow out of this. And then he has obviously dividend strong shares. Now, again, I would not say that you're going to get 8% yield out of those shares at the moment. Over years, maybe, but I would probably rather put like 3 to 4% here. And this would drop the average yield here significantly. Real estate, yes, he might find some real estate where he gets a 5% net return. Peer-to-peer, 10%, I think that's very realistic. And here he has obviously a very different split. The thing is here, and he recognizes that straight away, building passive income for financial freedom is not really possible with this kind of income. Also, you really need to pay a lot of tax on this dividend, depending on where you're living, and so this cuts this even more. So, well, dividends, it doesn't work out at the end. Taxation, very critical. So I agree that it might be not the best solution for him. Now, again, these were all his pitches, and my feedback is not financial advice at all, right? I'm just kind of commenting on this as if it were my $100,000. Now, here comes the aggressive route. The aggressive route, let's have a look. Basically, he doesn't put anything into ETFs, shares, and real estate, which I think is a very interesting approach. He doesn't put anything into peer-to-peer. We could discuss this. But rather, he puts a lot in crypto, and he put something into my next startup. Let's see about that. That's a very interesting approach. He does a 50-50 split on this one. And I mean, if it's my startup or another startup, it is a one-time, like you probably need at least 50,000. Probably for most startups, if you want to have a startup investment, you need to do probably 100,000. But maybe with 50,000, it would work out. Now, obviously, on this one, and he completely realizes that he has very, very high risk. I mean, these things can completely collapse. Crypto is highly volatile. Startups are highly risky. So, this is, very, very obviously a challenge. But he also captures a couple of things. If he knows the team well, if he knows a startup well, obviously startup investments can be really good, right? If you know people that have a track record, for example, definitely interesting. But it's very difficult to find that and not easy. You need to have certain kind of capital. And also crypto, very interesting at the moment. I agree with him that prices for crypto are really, really good, I think, at the moment. And obviously in the jurisdiction he lives, he can sell it tax-free if he holds it for longer than a year. So this would totally work out. Now, obviously the yields, I think the average of 15% is very difficult because it's either 0 or probably 100 per year. It's very difficult to have something in between. So these are his thoughts so far. We have the safe, the passive one, and the very aggressive one. Let's kind of result this out and have a look what he says of the conclusion. The passive income one is not that interesting. The broad diversification is unfavorable because of taxation. That's a word called taxation. So obviously, in his opinion, one of the most interesting one that he would love to do with 100,000 is to go into the aggressive route. So the 50-50 split, investing in a startup and in crypto. And now here are my thoughts on this, right? Now, again, this thought is based on him having all this financial backing, having some additional financial kind of base. And this is really, really important, right? How old are you? I know his age, right? So how old are you? What's your capability of generating income? What's your family situation? How good is your risk tolerance, right? And so this is really important to understand. So this is very individual, no financial advice. I'm purely running you through this because I thought this was a very nice example for the entire community because of the thoughts that he put into this already, right? So here is my personal input. Again, no financial advice. This is really just my personal input. So I would definitely keep the savings plans running. This is very, very important. I would not cut those. I think that's important. I think he should add a little bit of precious metals at the moment. Especially at this stage, I would definitely put something in there. And I would also keep a bit of a higher cash position. I think, especially when markets go down, this might be really, really relevant, right? So I do agree with him on some parts, and I spoke to him about certain things. If he really wants that, if he's really interested in this, and that would be how I would put the $100,000 in. So I would keep 20% additionally in cash. I know he has a good capability in generating extra cash, but I would put those 20,000 into cash. I think it's a good time right now to have some extra cash on the side. He will need the 50K for a startup. It's not gonna be possible if he wants to do a startup investment for much lower. Normally he would need a bit more. He would actually need probably 100,000. I think investing in crypto right now is a good time, maybe not as a lump sum, but maybe if you put it into 3-4 splits, maybe in 2 or 3, I think it's a good time, especially with a 15-year time horizon. And then I would definitely put something into precious metals. Not too much. It's more of a backup system, but not too much. And that's especially because of his situation, what he has right now. So this is how I would personally put money in there. Again, this is no financial advice. Also for him, I told him that this is no financial advice. This is how I would use my $100,000 if I had them from a sale from real estate and if I had to do something with it right now based on all these informations that he's given me. What I would be interested to hear is, what do you think about it? Give me some feedback, any extra thoughts that you might have. Would always be interested to hear that. Put it in the comments down below. Give me a thumbs up if you like this video. If you want to have more videos like that, first of all, I need more submissions of great questions where it's not just a question that one could Google, but really putting in your own thought. But then still let me know if you want to have more of those. I definitely would be open in sharing that anonymously, obviously. But give me a thumbs up, subscribe to the channel if you're interested to have more of this, and I hope I'll see you soon at the next video. Yours truly, Julian.